Hey, what's up everyone? My name is Valerian. I'm leading 2V Automation AI, and this is an agency that is building no-code and low-code automations, and our main focus is on increasing the return on investment for all of our clients. So today I'm going to speak about this exact metric for automation. How can you calculate this metric? What are important things that you can see when you calculate it, and I'm going to share a very easy to use template that we use internally in our agency. I'm going to put the link in the description of this video, so you can just go ahead and use it for your own use cases, and this should be something that will help you to understand whether you need to build the automation or you actually don't need to do this. So let's start with this template, and here you can see we have several sections. So the first one that we need to use is basically the standard procedure of calculating returning on investments, and to do this we need several params. So first of all, typically return on investment when it comes to automation means that you can free up some of your employees' hours that they spend on some manual repetitive tasks, and this means that those hours that freed up, they will be used for something else. They can be used for some work that needs human involvement that cannot be automated, or if it's automated, the results are worse than when it is done by a real human. Some kind of creative work or research or deeply professional work, rather than doing some kind of summarization or preparing documents or anything else that AI can already do, or anything else that can be automated. So the first param here, the first input value here is the number of hours that an average employee works per month, and typically this is not 160 hours. This is the number is less than that, so it's around 130. The next one is the average hourly rate, and obviously to calculate the return on investment we need to understand what is the rate of the employee whose work we're going to automate, because the higher the rate, the bigger the return. Next, we have the number of hours saved by automation. This is an accumulated value, so let's say we are automating a work of a specific department. Let's say you have 10 managers in your department, in your sales department, and we're automating a part of their work. Each of those 10 managers, let's say, spends 10 hours per week on that exact task. So we know that 10 of them spend 100 hours per week together, and this means like 400 hours per month. So we will put 400 hours in this cell. Next, we have the cost of the automation. This is how much does it cost to build the automation. Next, we have monthly maintenance cost. So this is how much you're gonna pay every month to keep the automation running, to fix the bugs, to pay for the credits for the LLMs, pay for the software that runs the automation, like Zapier, Make, or NA10, some other tools that are used in that automation. Everything is included in this number. Next, there is additional monthly revenue that is generated by automation, and by that we typically mean things that are now done better or things that have been improved with the automation. Let's say you had some human input errors, and apart from spending time, your employees also made mistakes that cost your business money. And after we automated, the number of errors will be significantly reduced, which means that you will earn more money not only by saving on hours, but also by reducing those mistakes. Let's say every third invoice had a typo, so or some kind of mistake. So there was additional back and forth cycle involved when these such invoice was not paid straight away, so you had delays in your payment, you had to reissue the invoice and things like that. In this case, this will be reduced with the automation. And how many months ahead we are going to calculate ROI, because obviously the longer the cycle, the bigger will be the ROI. So we will typically put 12 here, so we want to know what's the return on investment within 1 year after the automation is built. And these numbers are the calculated numbers in here. So we can see that, first of all, what is the monthly profit generated by automation based on the freed up hours and additional revenue. Then we have this value. Basically, it shows how many full-time equivalents, FTE stays for the full-time equivalent, and it means how many full-time equivalents of your employees will be freed up by this automation. Next, we have the ROI for the given monthly period. So basically for 1 year. And so in 1 year, we have 440% in this specific case. And break-even period, it's 2.2. I hope this one is clear. So we'll get to the next one right now. And this one, it is basically very specific to my agency pricing structure, and that's something that we offer that other agencies typically don't offer. But in our work, we use subscription-based approach to pricing. So we don't charge you for every specific automation that we build. We charge you a monthly subscription, which is around 4K USD at the moment. And with that monthly subscription, we work proactively to identify and create automations and integrate AI in your processes. We use this average number of hours that automation frees up every month, and on average we take around 60 hours among our clients. This is an average number. So with that number, we can calculate the return on investment based on similar params. Like this param actually is not necessary in here. So yeah, that's basically it. So you can see that we have this monthly progression over here. So the dev costs are fixed, so we have the subscription. The new hours that are freed up every month, they accumulate. So like first month we for example, we free up 60 hours. Next month it's additional 60 hours. Next month one more time 60 hours. So here we already have 180 hours accumulated, and in here we have like something like 1,380. So they are accumulating, and you can see that the total profit of automation in this case becomes positive on the 4th month of our work. By the end of the 2nd year, you have like 300K additional revenue that are led by automation. And this is for comparatively cheap employees. Let's say if the rate of the hourly rate is 40, the average rate is 40, you can see that it becomes profitable from month number 4, and the ROI calculated in percentage is like 740 by the end of the 2nd year. And this graph is just showing you the blue line is the profitability and the red line is the ROI. What else? We have a real-world example here based on the simple ROI calculator, so you can just check how it works for, let's say, a marketing agency in this case. And finally, there's a cheat sheet. We add new things here constantly, so it's quite short right now, but we'll be adding more to this public version of the ROI calculator. And it shows some of the operations that companies have and that we already know they spend specific number of hours on them. Obviously, they vary from company to company and from industry to industry. Some of them are pretty much industry standard. So if you have some standardized software, let's say you're using Xero for accounting, it will take you around like 20 minutes to issue an invoice, sometimes less, sometimes more, but depends on where you get the data for the invoice from. So, and we know the automation opportunities for these standard procedures. So we have this percentage in here, and you can see what would be the post-automation time and how many hours you can spend on 100 operations. This is just is a sheet that can help you to navigate through the most low-hanging fruits in terms of automation opportunities. So once again, what you need to do in your organization right now, if you want to start with things that really bring the fastest return on investment, you need to look at your company organizational structure and identify people who are doing the same job. So let's say you have multiple people in the same role, let's say sales representatives or marketing managers or just project managers or developers or designers. So the more people you have in the same role, the more will be the effect of any automation that you implement, because once you do it for one of those employees, it will be automatically deployed for all others. So even if it's like 20 minutes per day for one person, but if you have 50 people doing the same job, for 50 people it's already like 1,000 minutes per day, right? So it's like a lot of it's a lot of time, right? And if you multiply it by week or by month, you will get significant numbers, and you can see that the ROI of such automation will be very big. And on the other hand, you can identify one person who is spending 5 hours per week on something, but if it's only one person and it's not one of the C-levels, it might be not that pressing to implement the automation for this specific task, because there is only one person, and even 5 hours per week means in the best case scenario, we can get 20 hours per month with that automation. So if it's not somebody whom you really need on the other task, then that can be done later when you don't have any other fast wins in terms of automation. I hope this was helpful. See you and have a great day. Bye.